Welcome to Futures Friday. I'm your host, Merritt Black. Let's get into it. For those of you who perhaps haven't been here before, real quick, the ground rules. Use the chat for just general banter and follow-up questions and comments on other people's questions and things like that. You'll probably want to change your to field in the chat to everyone, like this. Hello, Luis, Hussein, Nick, Six, Thaddeus, Josh, Chris, Tanush. What's up, everybody? So this is a mentoring Q&A webinar. So you'll see there's a Q&A box. If you hit that Q&A box, you can submit questions. We usually don't get to all of them, so try to get them in there. But let's hop into it. We'll take them on a first come, first serve basis. I'm looking for questions in the Q&A. We'll follow up with any chat or follow up in the chat. Got it? Great. What screen should I share? What do you guys want to see? S&P, crude oil, NASDAQ, all of them. Yes, crude, S&P, Shiba. All right, ES has the vote. I was in NQ today. Actually, believe it or not, I didn't trade the S&P today because I was deep in the Qs. I'm not even going to call my position out because it's wild. I have been swing short when you need to be swing short. I've been swing long when you need to be swing long. And I hate to even say that kind of stuff because it's like, it sounds like hindsight garbage, which you're probably used to hearing on webinars. And that's not what we're going to do here. My traders know. I posted it to them yesterday what my position was. Anyways, if any of them are here, they can back me up. Okay. How do I share this screen? What's going on? And yes. All right. First question from, can anyone guess? You got it. Luis. I'm doing both swing and intraday trading. All right, to the questions. Here's one. Luis, this week I noticed you tweeted something like, no CPT uses Renko. Well, for a new student like me, I have to ask why. And what do they use then? Well, it's a true statement. It's a true statement from my experience. Let's put it that way. Crude selling off. I have never seen it. Okay. I'm being honest. I've never seen it. The profitable traders I know use time. Most of them use time. Most all of my students and CPTs that I've taught use volume. And there's plenty out there that I've seen that use tick-based charts. Even on higher time frames. Just because you use a tick or volume-based chart doesn't mean it's a low time frame. Renko I've never seen a CPT use it, and that's all there is to it. Sure, Chris is saying it's just a subtweet. I mean, you're kind of right. Like one of my traders, there's been people who've been influenced lately in my sphere, and I think that them using Renko has hurt them. Okay. So that's one of the reasons. You're right. It was a bit of a subtweet there. That's one of the reasons why I made that post. Another one is, Jeff, why don't you ask that question? CPT is a myth. Well, we could talk about that because I don't know if I agree with that. It depends on what you mean. So I wanted to influence some people, and I wanted to alert other people. Hey, guys, this may sound, The more sexy your charts look, the more colors and bells and whistles and all kinds of this stuff, in my opinion, the less likely you are to be consistently profitable. The closer you get to looking like you're trading off of an Excel spreadsheet, probably the more of a BSD you are. Okay. Go to any professional desks. The closest thing to sexy you'll ever see is probably the pretty red and blue colors on a TT platform. That's probably as good as it gets. Beyond that, it's people using simplistic things in front of them that are truly masters of their craft, right? Of their mind and of their trading prowess. All right. So that's that. Number 2, Kulu. Hi, Merritt. I have a question about the line in the sand, LIS. For yesterday's trade session, you mentioned if price holds below line in the sand, then look to scalp short. From my understanding, the line in the sand for this session is WDVAL. Am I right? I don't know. You'll have to go to the community and find out. I'd like to seek your view advice when it comes to accessing the scalp short trade idea. In this context, there's no CVA, PVA line in the sand to lean on, so weekly different value low is the only line in the sand. As a higher time frame line in the sand zone, would you say that it's less precise, that I might need a larger stop loss to access the trade idea? Would you say that it's a lesser quality trade for that reason? So there's 100 questions in here. So let me go look at yesterday. So there's more things that are interacting with this market than just one reference. There's other things that are, giving us a bullish bias, right? It's one of the reasons I went from swing short in Q to swing long in Q yesterday. So let me rephrase. I was already out of my swing short. I went swing long in Q yesterday. I didn't like reverse on a dime. So there's more factors at play there, When it comes to needing to give a trade more room, for me, that depends on short-term conditions, not narrative. For me, I like to use little momentum shifts after pullbacks to get into trades and to define my risk, to define my stop for that entry. So it's not a narrative thing that would cause me to need more room for a trade. I compartmentalize short-term conditions, intraday rhythm, intraday framework within the context of context, right? Following with this question here, personally, I think that some form of acceptance in the trading time frame is important to access a trade idea. For Thursday's session, the market spent majority of the time inside the trading time frame DVA, so I decided that there's no acceptance to the downside. Again, you have to separate those things. What we're doing relative to DVA has no bearing on contextual bias and lines in the sand. They are totally separate. May I ask for your view on this matter? Is waiting for acceptance on trading time frame a good way for me to access the trade idea? So we've answered this in the community. I don't know if you've seen the thread, but it's in the NADRO section. In fact, there's been a really good stream of commentary going on it lately. Let me pull it up here, see if I can find it. Here you go. It's on the first page of, if you go to, community.apterostrading.com, go to latest posts at the top, and then scroll down a little ways and you'll see it's called acceptance, parentheses, TTF or narrative time frame, question mark. Great discussion, great answers from myself, from Nick. That's where you want to go for that. So it's a trade-off, right? The short answer is it's more aggressive to just use trading time frame for an acceptance read, although it's certainly acceptable if that's the way you want to roll. You're going to get in earlier, but you're also going to be in wrong ideas which aren't actually playing out yet, right? So it's a trade-off. I do a combination. It just depends on other, as Nick put in the thread, other confluences, right? Not necessarily price confluence, but directional, bias confluence lead us as good NADRO traders to be more aggressive or less aggressive. Okay, so I didn't talk specifics about line in the sand, but if you want to do that, go to the community where we have a place to do that. This is a public webinar, so I don't talk as much about specifics. Okay, Christine, how do you prepare psychologically for the trading session and stay focused in the now moment? It's such a overused term, being in the present, staying in the now, but it's overused for a reason, because it's really, really, really important. Just make sure you mean it when you say it. Not you, Christine, just everyone in general. Before I talk about how I prepare, let's talk about being in the moment. What traders tend to do is not be in the moment. And let's first describe what the problem is, and then we can talk about what's the superior way. Traders tend to either live in the past or live in the future 100% of the time, right? This is what I refer to as a natural human trader. All of us are natural human traders when we start out. We're not suited for trading well psychologically. So living in the past, what does that look like? Well, what happened to you yesterday affecting a decision you're going to make today? What happened to you on your last trade affecting whether or not you make a particular decision on the now opportunity, or not even opportunity, right? Just now. But you're not thinking about now. You're not being objective about what now is. You're filtered and colored by what just happened or what happened yesterday, or you're pissed off about something, or you're nervous about something, you're upset about something that happened in the past, and it drives, sometimes out of habit patterns, it drives what your decision is in the moment. So Pierre, if you have questions, put them in the Q&A. First come, first serve basis, like we said. What about the future, right? What does that look like for traders? Well, that looks like, oh man, this idea is going to be right, and I'm going to make how much money? Let me get my calculator out. Here's how much I'm going to make. Or needing to be right just on an egotistical level, or using the market, to fulfill your hopes and dreams and goals and all these kind of things. And you're looking at what you want to have happen, even if purely from just an analysis perspective. You're in the future. Heaven forbid you read something or heard something, and that's potentially, something from the past that's now influencing your decision making on what you think about the future, what should be. You're not looking at the markets at the hard right edge objectively, analyzing what is. That's one of the biggest, most common statements that I talk about with people, is trading what is. And I usually capitalize is, is, trading what is. That's being in the moment, trading what is, not what was, not what you want to be, but what is. The very first section of the NADRO course that I teach and give to my traders is mental framework. The very first section, module 1, is mental framework. Without it, it doesn't matter how good of an analyst or quote unquote trader you develop into with whatever skill sets and tape reading or whatever. If you're mentally going to break down, nothing else matters. So it's really, really important. Now to the question, how do we prepare psychologically? How do we stay focused in the now? Well, you got to do a self prep. right? Most people just wake up, get a cup of coffee, whatever, start pouring through the charts, looking for trades, right? They do not prepare themselves. So you need to prepare yourself. You need to take a look at your review from yesterday. It's all one big cycle. You need to look for at your review yesterday, and therefore you should have a process goal for today. Right off the bat, you're focused on not the charts, not the trades, but something that you want to go execute successfully today or do today. Not something you don't want to do, something you do want to do. More people need to move away from, I got to stop doing this. Well, okay, great. That's worthless. Absolutely worthless. Go figure out what it is that you can do in order to not do the things you don't want to do. Right? Focus on it from that perspective. So prepare yourself, think about what you want to do, check in. Are you too physically sick or tired to trade that day? Should you take a half day? Should you take a break, take a nap, get some food? Hungry, personal strife. What's going on with you? Check in. That's half the battle. At least you can acknowledge it and leave it at the door, perhaps, and focus on trading well and trading what is, right? So, and then finally, I think one of the most important things is checking confidence, overconfidence, underconfidence, right amount of confidence. Where are you? From way underconfident to way overconfident. I recently had a string of like 11 out of 12 days profitable. And you better believe that in my self check-in, I was like, wow, I'm overconfident here. And again, admitting it, acknowledging it, bringing it to conscious awareness is half the battle, so that I can then kind of alter my state and alter my game plan. Hey, you need to watch out for that. That could rear its ugly head. Put a Post-it note down, journal about it. And then staying focused in the now, once we're off and running, it's very much about alternating states between zooming in and zooming out. I find very important, right? So I'm continuing to run through almost like a top-down analysis rather than just focusing on the shortest of time frames. That gets people into trouble. It gets things out of kilter. Another thing is just being process driven, right? It's having the self-awareness to say, I want to get long right now, or I want to get out of this long right now, whatever the trade decision is, and then running that through process. Okay, that's what I want to do. Why do I want to do that? Let's see if it's what I should do based on market generated information at the hard right edge, filtered through my process. That's the quick and dirty, Christine. What do you think of using theoretical position average line for Sierra trade management? I don't like it. Do you consider it trading P&L, or is it a good tool for developing a trader to keep track of how scales change average position from flat, especially in the beginning of management? I think it's a bad idea. I think that you're now saying you're focused on how much partial profits you've booked, for example, that's improving your theoretical position. So, and now what is that? That's your break-even point. That's your emotional point. It has nothing to do with what the market's offering. It's all about your trading and your P&L. And that's not what's important. What's important is what the risk reward asymmetry is, what the contextual risk landscape is, what speaking the language, seeing what the market is trying to do, where it's trying to get to. All the work that goes into like the DMIs that I do. Right. And then from there, it's about assessing, how can I access these ideas? What ideas should I be stalking, if any? And then how can I go execute on that as close to flawlessly as possible and manage my risk? And so keeping track of where your theoretical break even is based on scales and whatnot is, like I said, I don't like it at all for those reasons. RTH hours for market profile. It depends on the market. but I'm guessing you mean equities like US indices. So Eastern time, 9:30 to 1600. That's correct. The first one, 9:30 to 1600, 9:30 to, and in fact, I use 9:30 to 15:59:59. That's what I use. A lot of people use 9:30 to essentially 16:15. I don't like those 15 minutes. I don't use them. Are moving averages of any importance in ES? I have no idea. I'm not a big fan of moving averages. Obviously, there's a lot of people who look at the daily bar, 50 and 200 and stuff like that. Is there any edge in those? No, zero. Go back test it. Moving averages are like the easiest thing in the world to back test. There's no edge there. If there was, it would disappear. You wouldn't be the one discovering it, asking this question. No offense. The quants at wherever, would discover it and be taking full advantage of it. Now, could you use moving averages as a part of your process to give you some type of filter or something? Sure, go for it. Not something I do. Moses asks, how heavy do you weigh yearly, quarterly, monthly, weekly prior value in comparison to developing? Prior less than developing. A lot of times I'll look at actual volume profiles over those periods and then kind of assess how good of a measure of value it is relative to distributions and things like that as well. Moses, also, my financial budget doesn't allow me to participate in AGM. Could you please give me some tips what your beginning approach is to improve your AGM students so that I can apply it myself? Sure. We typically start, every group's different, but we typically start with developing process. We take the entire first week usually, and we actually write out process. We develop every part of your, I'm not talking about routines or prep or whatever. Those are other things that you need to take care of as well. But we start with trading process. How do you make trade decisions to the extent that you could take that and hand it over to someone else who maybe speaks, NADRO, and they could trade your plan? That's how good it has to be. How do you, what's your risk plan? How do you find ideas? How do you execute ideas? How do you handle losing trades, winning trades? Right? What's your playbook? Start there and then start tracking your results. See what works, see what doesn't. Again, harder for you to look at yourself and, not knowing what you don't know. But that's what I would suggest. Dayton, I have a hard time with actually playbooking trades. I see setups that I trade, but when I start to categorize them, there are a million different nuances and I struggle organizing them. Can you give me some tips on how to categorize trades and their nuances? Great question, Dayton. Start with the high level. Don't get so bogged down in the details yet, right? For me, playbooking is not even really about the execution of the trades. That's how high level it is for me. It's about context. For a NADRO trader, I think the most important part of a playbook is context. What's the situation in which a long or short makes a ton of sense? Start there. Happy to, if you have follow-up or something, put it in the chat. I'll watch for it. But that's where I would start. If you have follow-up questions, let me know. No, Moses, I do not stop trading in December. A lot of the great opportunities into December. A lot of people think you should just go away. That's not true at all. What are the core and cultural values that shape the teamwork on your prop desk? Well, I'm not, it's just a small shop here. I don't really have written out things like that. but I can just talk to you kind of off the top of my head. Integrity comes to mind. Transparency comes to mind. Tremendous work ethic. Self-responsibility. Those are the things that come to mind. Sharing and helping. Dustin asks, you use market profile, correct? If so, do you split your profiles? The only times I'm splitting profiles are when I need to look inside the profile because I want to know how it unfolded as I'm making a decision with the profiles. The other only way that I split a profile is, oh, I'm sorry. Depends on what we mean by split here. Sorry, I was talking about like putting letters or blocks in their own column, like splitting it out. I bet you're talking about cutting one profile somewhere, splitting it into two profiles. I'm going to answer it that way instead. Yes, I split profiles where I feel there was half the day, which was perhaps in the same condition as the prior day, for example, and the other half was not. I'll split them and perhaps do some merging. Or if the value area is very much out of whack for the session, right? Typically think of like a double distribution, and the value area doesn't represent really any value at all because it's trying to calculate value area off of two balance areas. That doesn't work. So yes, I'll split it. All right, we got time for one more question here. I guess we'll answer the next one in line here. Hunt's Charts Henry Becker asks, trading psychology premise. If you get beat up with emotional volatility, I'm not sure what that is, after trying a plan a few times, getting beat up after trying a few more times, what would a technique be to release that EV other than breathing, as sometimes you only have seconds before your original plan may execute? Well, you're going about asking the question from a Band-Aid fix perspective, and I'd like you to reconsider it from a holistic root core problem perspective, which is, why are you experiencing this kind of emotional volatility, as you call it? That's the problem, my friend. That's the problem. So what you have to do is, either you could start by, reading some books. You could take my course, listen to the mental framework section. You have to learn to think differently, right? Someone mentioned Mark Douglas earlier. That's the phrase that we all got from him. You have to learn to think differently. And I break it down into multiple areas. You have to be able to think differently about markets, right? What they really are, what they entail. Most people don't have the right view of what that is, what markets are. You have to think about trading. What is trading? What are we trying to do? You have to think differently about that. 99.999% of traders think about trading and what that is and what it entails entirely wrong, and they set themselves up for failure. Right? We have to understand ourselves. Those are the things. If you understand markets better, you understand randomness, uncertainty, thinking from what I would call EV, which is expected value, like expectancy type formula, thinking statistically. That's how you have to start thinking, to put it, the short version. Hussein, Pierre, Kulu, Prashant, Dean, Anonymous, and Pierre again. Sorry, guys, we are out of time. Great conversations here. Great questions. I genuinely hope that every week this is a helpful, beneficial, value-added conversation to you. I know it is for me as well. I really enjoy having to think about these issues with you, and we all get better and grow together doing it. Thanks, everybody. Have a great weekend. We'll see you in the community. Take care.